Welcome back to Limitless Trading. We wanted to give you a little bit of an update on one of our slower days. We try not to do too many videos over the summer because, as I said before in previous videos, there's nothing to short. Summer has not been bearish for 21 years, even with the upcoming rollover on CPI, which is going to be really hot. Powell's already preparing the market for a hot CPI. So the market is going to anticipate a hot CPI rollover a little bit, give back some of these gains. But I said to everybody, this was an inverse head and shoulders. Um, the market usually only gets one correction. Everybody gets upset because they miss out because they want lower. There's natural anger in the market. Inflation is real. Prices are not coming down. Housing's expensive. And now Congress is about to give themselves the largest grift because they're retirees. They're done. They spoiled their kids. They spoiled their grandkids. Now they're pissed off that their kids and grandkids don't want to work. So they're saying, all right, we'll give ourselves longer retirement. We're living forever. We'll just pay ourselves more. And good luck with that. So the boomers, the generation right before mine, are upset that the generation after me are spoiled and living off of TikTok and all the social media, but they also didn't want us working as hard as them. So it's like you can't have the cake and eat it too. But nonetheless, I said my targets were 6,500 plus, probably 7,400 before this all collapses. So what are you doing? You're scaling out. You're not challenging this run because the run does not end until Labor Day. With that said, if you want to short and take some puts for CPI, absolutely. We're going to roll over extremely hard on July 15 CPI into the July OPEX, right? There's too many calls going into it. So what's going to happen? The market's going to go down, not to pay everybody into those calls. But July is generally bullish. Summer is bullish. I don't care what the pundits say, whether we're attacking this guy or tariffs. I said to everybody, tariffs are over. There are no tariffs. Um, this right here, this drop tells you that POTUS backed off. He has no balls for tariffs, and that's okay. I don't like tariffs either. I'm a globalist. I like cheap stuff. But I also like hard work and so on and so forth. But the market was destined to go up um, on free money, right? The wealthy are paying themselves more because they're not going to be around for my generation or the generations after me. They're not going to care. POTUS has said it repeatedly. He won't be alive to worry about national debt or this grift or these BS coins. So I say play the market that we get. Seasonality says that next week, starting the 9th and 10th, we have, probably some very bearish news starting to come in that has nothing to do with the economy or jobs report. We have exterior catalysts that are going to hit the market extremely, extremely bad. And the next generations will not be prepared for it. It is what it is. So if you want to short, you want to scale puts into, let's say, July 25th to cover the CPI drop, but don't bet against Powell because Powell may have to cut rates whether he likes it or not. So if you want puts, go into late October. The floor for this upcoming all these catalysts will be October. Why? I told everybody the market is not forward thinking. It's not. Everybody says the market thinks 30 days, 60. It doesn't. The market reacts and moves on, reacts and moves on. If the market was forward thinking, we would be below 3,000 already with GDP going negative. So what's going to happen? GDP will start going negative extremely quickly. Supply shock is going to hit the market after August because remember, everybody's on vacation, school's out. So the demand for home is not there. Everybody's out. Groceries are doing okay. Energy is always up in the summer because of summer travel and these heat waves and storms. Um, so energy is kind of flat. So what do I tell everybody? If you want to hedge short, go out till October, actually late October, like Halloween, for the October drop. We have external catalysts that have nothing to do with the job market that's going to hit. Now, price shock is going to hit. Why? The labor market is rolling over. So what's going to happen is companies are going to have to borrow money to pay American wages. Okay, Americans will get money, but that'll start bankrupting the system. Why is it that we had cheap stuff come in? How did Biden fix inflation? You let people in so that labor costs are low because America was made on cheap labor. It's not a political opinion, it's historical fact. And the only way that prices collapse are COVID. It was that we shut down the world. Had nothing to do with anybody being a genius. And 9/11, we were hit and fear hit the market. So when fear re-hits the market, prices will collapse. We'll all go get cheap houses, buy cheap stuff. Rates are going to be damn near zero because of external factors that have nothing to do with labor market here or external stuff. The big players know what's coming, so they're front running. They're making all their money now. Hence, I said, guys, we're going up to the nosebleeds. We're going to go 6,500. We're probably going to go somewhere in the 7,000 range. But you can start getting out of your equities and then start getting long puts, because what happens is market makers are making the cost to short stupid cheap for themselves. So I had said to you guys that this was my outlook down here, right? This bear flag became inverse head and shoulders right here. I wanted this to go a little bit further down, but I said, guys, all of this was going to be a relative low. The market was going to hold the fort, and she's going to come up all the way to, personally, I well, we're going to come up to about CPI. CPI is on the 15th. Let's say 6,500. Everybody thinks, oh, it's a one-time hit. The 15th, we are going to drop like a rock. We're probably going to back test 5,900, if not 5,800. I would not be surprised if by FOMC we're down here 1,500, scaring the crap everybody. Then we want to go long. Why? Because rate cuts is going to squeeze the market. We're going to go up one more time into about Labor Day, because most people are not watching the news. They have no idea what's going on until this day. You know what happens on Labor Day? We go back to work. We go back to school. We start seeing the price of, oh, books do cost more money for my kids. All these cheapy stuff that we're used to is going to skyrocket, because now, even if there's no tariffs, companies haven't bought stuff. There's no backfilling for all the stuff because companies have no idea. This bad boy up here, up here, up here. Actually, let me raise the screen a little bit to show you guys where I suspect we're gonna go. We're gonna come down here, 5,800. We're gonna retest this. Then we're gonna go up because the market's gonna get excited. Oh my God, rate cuts, rate cuts, rate cuts. Right up here is where you guys want to start taking your short, all the way on this trend line, which was the bull flag from Mr. POTUS himself. This is where we want to take. We want this one coming into. I don't even want to. I actually can't declassify or post what hasn't been posted yet. But up here into September, we may have in the nosebleeds. This is where we want to take puts, and you want to take puts into the what will be the October low. My target for October is way down here. Actually, 4,800 would be conservative. So my puts are under 3,000. Um, why is a little birdie buying ahead of me as well, right? Why are market makers buying October puts? Well, a couple of things. They see the GDP is going to roll negative. Um, but there's other catalysts involved that have nothing to do with the economy or GDP or POTUS or anything like that. But for now, this is what you're looking for. When we collapse into CPI, because it's going to be hot, it's going to be a fast reaction down, you want to take one more long, because in the near term, rate cuts are bullish. In the near term, that's free money, right? Companies are going to go and buy and buy and buy. They're going to buy this fear. They're going to say, oh my God, this is a gift, right? This is a real inverse head and shoulders here. And we're going to go much higher into rate cuts. And then we collapse. But I tell people, if you're going to short, that's okay, but go long haul. Don't short. You can short the summer here. I mean, you could literally take a short for just CPI, but I would just buy it like next week. Wait till like the 10th so you're not bleeding out. Why? Because people were buying down here. They're trapped. And I said, all these folks, if you looked at my previous video, all these folks want out and they want profits. Market makers know the answer to the test. They know where they're taking the market. They know all the catalysts. They know what I know. They have probably even better intel than I do, because they're making the intel real so they can trade all of this. So again, be careful trading against the summer. If you want to take puts, hedge into October 31st for the mid-October low that will come. Or take some puts into like end of July just for the CPI kick. Market will overreact. They're going to trap some bears, right? Because puts are getting cheap. Look at the market. Look at history repeating. Last year, what was the top? FOMC. Powell didn't cut rates, right? And the market dropped. So July is usually bullish in, bearish out into OPEX. So again, hedge yourself against really bad CPI, but don't bet against rate cuts. I don't care what the market said. Powell has to cut rates. We're going to restart our courses again. These courses are not BS. We're going to teach you what we do so you can go off on your own. We actually closed the Discord. We may reopen if enough people want daily help. But I believe in showing you how to fish and doing yourself. If you're interested in the courses, please comment course below and we'll start scheduling if we have enough people. If not, I'll do them one-on-one, but it will cost more to have to do them one-on-one, just a little bit more, because then I'll have to do individual courses rather than a class. I'm showing you guys. If you look at our past videos, we've been saying the trend is your friend. Trend lines don't lie. Now, patterns can fail because this was a bullish pattern. This was a bearish pattern that worked out, but market goes up more than goes down. When POTUS did COVID, and COVID was going away, um, people ended up dying. He was wrong. And what happened? The summer was bullish, and we didn't roll over till August supply shock. I believe history is going to repeat itself. And his recession lasted 18 months. I know the dates and the times because people are betting it in the long ball in the market. We also take Nancy's trades, right? Why is Nancy betting on certain longs, on robotics and automation and universal basic income? We have all of this. I'll teach it to you. My team will teach it to you. Comment below, and we love to show you how to beat the market. The market is very beatable, but you have to know who you're playing against and who you're beating. Good luck. Take care.